Welcome to the Mid-Market Edge podcast, where we uncover operational insights for private equity-backed portfolio companies. I'm your host, Kevin Bonfield, and over the last 30 years, I've had the privilege of working with fast-growing entrepreneurial teams, helping them scale, tackle challenges, and seize new opportunities. On this show, we'll talk to industry experts and seasoned leaders who will share practical strategies to drive growth, boost efficiency, and create value in the mid-market. Get ready for an insightful, engaging conversation that dives deep into the real-world issues facing your business. I'm excited today to welcome Jeff Helfgott onto the Mid-Market Edge podcast. The focus that we have in this series is around intelligent acquisition integration. And given Jeff's background with Planet Fitness and then going through the med spa world and now with men's grooming and boardroom, I'm excited to hear Jeff's stories about acquisitions, integration, and all of the stuff that comes along with that. But Jeff, before we dive in, what have I missed in terms of introducing you?
You hit the high points for sure. I think what's kind of unique about my background is I had an entrepreneurial background. I had my own web development company in high school and then pivoted from a very lucrative, rewarding, high autonomy role into joining the world's most prestigious leadership development nonprofit called the U.S. Army. So I swung the pendulum pretty broadly from being very autonomous and profit-driven to be very people-driven and mission-driven. And I think that combination of experience has provided me the opportunity to be really bringing new thoughts and experiences to the lower mid-market businesses in which I've been charged in running. And over the past 10 years, my experience has been largely in growing lower mid-market to mid-market, largely multi-unit consumer-oriented business in the franchise space. So I've had the opportunity to work with Alamo Drafthouse and experiential movie theater concepts. I was with Planet Fitness for some time. I was a board member for a European wax franchise. And most recently now taking the helm at Boardroom, a upscale men's grooming salon. So excited to hear the many ways I've skinned my knees from all these experiences, but my focus will be through the people lens.
That's awesome, because one of the ways that you described that was having been an entrepreneur, but then also having gone through the Army. It almost feels like that enables you to put yourself in the shoes of the people that you're leading.
I think that's one of the things I'm most thankful for from the military experience. People always talk about being calm under fire, being able to put things in context compared to other experiences that you've had. Maybe this certain situation is not as dire, which is very fair and valid. What I'm most thankful for is the Army gave me the opportunity to work with people of different educational backgrounds and find a way that I could communicate with them at their level to inspire and rally them around a common goal, knowing that there's a wide variety of people with whom you're working. And I think back to my first, platoon back in the 2003 to 2004 timeframe in Iraq. Yeah. I had people that just graduated with their GED and came directly into the military from their high school program. And I had an investment banker who had been on Wall Street when 9/11 happened and enlisted. And he had an even bigger jump in earning high money to a low wage than I did when I left my own little startup to join the military. But it's such a broad, diverse group. You have to really, as a leader, understand what are the motivations for each of them and how can I speak to them individually at their level so they don't feel talked down to, but can also understand how their part fits into the bigger picture. So that's where I'm most thankful for the military and giving me that skill early in my career.
That's fantastic. That thought process about meeting people where they are and being able to motivate them regardless of what their background is or where they're coming from, skill level. It's something that we talk about in my family. I'm going to say my little girl is 15 and at the front end of her volleyball career, and she's working out how to motivate the rest of her team as she goes along. So that's great. So we talked about integration work. in terms of the roles that you've had with Planet Fitness and so on, where did you first start to dive into that kind of work, and what did you learn early on?
Before I jumped into the PE-backed multi-unit growth, I had a stint at McKinsey, actually
Mhm.
working out of their business technology office. And this was my first real exposure to integration work, where there were large publicly traded companies that would merge, but they never went through the process of fully integrating. And
Yeah.
a lot of the attention was on the press release. This acquisition is closed. Look how much money was spent on the deal. Look at how the empire grows. And what was neglected was, what is the post-care work required in order to realize the upside of that initial investment thesis? So, you're looking at companies that have never rationalized their tech stack. They have multiple teams across multiple geographies that are doing effectively the same tasks. So they're not benefiting from the scale in any way. In fact, the scale ends up being a burden to them. So a big part of my role at McKinsey was the longer term, not blue sky projects, but actually sitting down for longer term engagements with these clients and saying, how do we make the most of the assets you have? How do we rationalize the technology in order to be a more efficient system? And more importantly, how do we align the teams so that we have this great history with each of these brands that are now one brand? How do we respect the heritage of what they were while also not being imprisoned or held back by that? And that's something that I've been really trying to keep in mind with all of the acquisitions I've done since. We generally acquire these businesses for a reason. And I very rarely get into the fire sale deals. There are people who specialize in that. If that is you,
Right.
kudos. You are a very resilient person because they're not a lot of fun, but they can be very lucrative. I'm much more of a, you are successful. I think you would be even more successful and have a lot more fun doing it as part of our team. So let's work together so that we can operate at our full potential together. So with that, you're going into the mindset of, you're high performing people. I don't want to disenfranchise them by making them feel like a victim of the process rather than a part of it.
Yeah.
So that's where I spend a majority of my time. Again, negotiating the deals is fun. That gets the accolades in the board meetings. But what really matters in the end is the EBITDA you're able to drive from it and the value creation.
Yeah, so the idea that you would buy something and then not integrate it, it just feels like I've got more size, but I've got more complexity that I'm not dealing with. One of the issues it sounds like you're talking about is thinking about what's common versus what's unique. What can we commonize versus what needs to stay, at the customer edge or at the, in the local operation. Is that the way that you approached it?
Yeah, it's a great framing. I generally look at it from a couple of dimensions, but my favorite is what is not only common but almost commoditized.
Mm,
What are, if you draw the analogy to Maslow's hierarchy of needs, what are the
yeah.
foundational things where if you don't get it right, you get in trouble?
Mhm.
Let's take all those and then centralize it, because most of the time it's that stuff that many people who work with clients or with members or in a sales position, they don't find some of those tasks fun. And to overly simplify, it's the traditional HR, accounting, the compliance driven things. But when you start getting down into the details of it, like marketing, for example, there are a lot of parts of marketing that could easily be centralized, like the data analytics to track your campaigns and how
Mhm.
effective they are. And are actually better when they are centralized, because then it ensures that you're measuring consistently so you can see where the best next dollar is. But there are some businesses where that local knowledge, that hustle, that going out and shaking hands at the local community, that's
Right.
needed in order to unlock the full value of the business. And I look at, my current business and Boardroom as an example of that. This is a relationship business. This is a business where people know each other from their country clubs, from their car clubs.
Yeah.
You can't do that from a centralized way and do that meaningfully. So I look at, what are the elements specific to this investment thesis that take time away from the people that are really special at doing what matters most. So
Mhm.
let's pull all that off their books and give them even more time to do the things that they find most exciting and that unlock the most value.
Yeah, and to have that. have that conversation, I think, thoughtfully. So it's not just we're going to centralize marketing, but here are the elements of marketing. That sounds like a nuance that we should think through. Um, Now, when you start that process, what does that look like in terms of communicating or setting expectations for both the existing company that you're working with and the one that's coming in?
I love that you asked this. This was not prompted. We did not discuss this
Exactly.
before, but again, I think this shows your level of sophistication yourself that you knew to ask this. I'm a big believer of getting the message out as soon as possible. Because the word always gets out, and the longer it goes between uh, people hearing about it and then hearing what you have to say, that gives them time to allow their mind to wander in whatever direction. Some get really excited and then set expectations for what this will mean for them that we can't match. Some get really scared and think of the what is like worst scenarios that could be happening that aren't reflection of our plan at all. So I actually like to meet with the team that we plan to partner with, and certainly the leadership team, depending on the size of the organization, before we close. Ideally, 30 days before close, I've hosted town halls where I get to meet whatever members of the leadership team or the employee base makes sense and talk to them about what are the expectations I like to set for this deal, why we're doing it, why we picked this specific company, what we like about it, what we hope to do together, what will change, and what very importantly will not change as well. Because what I found is if you tell people it's going to be bad and there are things that they don't like, but you let them know, um, that takes the worst case scenario in their mind generally off the table because you've already addressed the elephant in the room. And where I find people get in trouble is they over index on nothing's going to change. We love what you're doing. We want you to just do more of it. But in reality, like things will change. Like payroll by nature has to change. There's a new name on the paycheck. Benefits almost certainly changes, although thoughtful groups will work with both carriers to find a way to make that transition painless. And I think that's the mark of a really sophisticated integrations team when you get to that level of granularity as employee by employee, how will the change in the healthcare benefits impact them? I think that just shows again a level of care um, that people don't always recognize in the moment, but they will feel if you don't put that in. Um, so again, there are a tremendous amount of considerations to put into this process. And again, I really appreciate people that do a good job in these moments of being bold and being honest about what will change, knowing that it might not always be received well, but you're giving them the benefit of the doubt to step up and receive it. Um, you've done your part by signaling what's true and what's accurate, not just trying to tell them what they want to hear.
Yeah, I think that clarity that you give is really kindness, right? Because in the alternative is that they're going to think of the worst case scenario and they're going to fill that into the story rather than just having this is the rationale. How have you found it in terms of having those conversations before close and then gathering it through and pulling the thread afterwards? I mean, it sounds like really the integration is starting before the deal is closed.
I think of it as a parallel process rather than a sequential one. And
Mhm.
I've had some experiences where it's gone better than others. Um, but by starting early, it's always gone better than in processes where I saw they waited until the ink was dry. And there are
Mhm.
really reasonable reasons to wait. Um, some people will say, well, what if the deal falls through? Now I've set the team up and haven't been able to, deliver. Now they're wondering why didn't the transaction go through? Did they find something wrong with the business? Did they get cold
Mhm.
feet? Um, there are real and reasonable reasons not to do this, which I understand. I just don't agree with. Um, I do find it prudent to wait until you're past a certain level of diligence. So for me, waiting until you're done with accounting diligence and then legal diligence. So the terms of the deal
Right.
are generally ironed out, and then the money is generally locked in. Um, the EBITDA that they told you they have is close enough to the EBITDA that you're finding, where you feel comfortable moving forward. Once those two thresholds are passed, I find generally 90% of the deals closed at that point. But prior to that, when I sign an LOI, I think it's still a coin toss. And coin toss is not the time to be speaking to those employees. Waiting until you are at that 90% threshold, I found to be the right way to do that. And again, I've had some town halls that have gone great with the med spa business that I was in. These businesses that you're acquiring might have 5 or 6 employees total. And what we generally do is meet with the 1 or 2 most critical ones the night before for dinner. Uh, Allow them the chance to meet me in an informal setting and hear my vision and make them feel special that they're getting an early notice. But then very quickly the next day, I'm talking to everyone because word will get out. Once it's out there, word will spread. So I was able to meet with all the employees of that team. The more informal, the better. No PowerPoint, looking them in the eye and telling them what I plan to do. There are others where the organization's larger. If you're dealing with multiple locations or organizations that are more than 100 people or so, it's really hard to get in front of all the employees, especially if there's shift work. But getting in front of the leaders, like I did most recently with the boardroom team, with a group that we acquired, we met with the leaders and then their number twos of every single salon, and we had a conversation, and that did not go great at first. It was a lot of, why is this happening? We don't want to be corporate. This is going to completely change us. And I still credit that town hall, as difficult as it was in the moment, as being the first opportunity to show who I was and who our team was.
Mm.
I sat there through, I dealt with a couple of very difficult questions, and did so with transparency, telling them things that they might not necessarily want to hear. And I'll tell you, very quickly after that, they saw I was an executive, I was a leader that was willing to be someone that would stand by their word and someone that would not sugarcoat things, someone that was willing to get in front of them while they throw barbs. And that actually created a better relationship for it. And I I like to get those barbs out of the way as soon as possible because muscles need to rip to grow. And that was our opportunity to rip and then come back stronger as a result of it.
Yeah, and those kinds of conversations build trust between you and the team that's coming in. Now, as they're coming in, there's obviously the pressures of running the business and then starting to run through the integration. And sometimes you have, you're expecting team members who are in the middle of the organization to take on those integration roles. So where have you seen that work well? Um,
I think it depends on what your growth thesis is. If you are growing and there's opportunistic M&A that pops up, you
mhm.
need to underwrite the cost of doing it well as part of the deal cost.
Yeah.
And if the full integration service that you wish to provide in order to guarantee you with 95% certainty that you can realize, the thesis that you're choosing to follow here, if you can't stroke that check, then you shouldn't be doing it. You can't just look at it as the deal cost. You need to look at it as deal plus integration, which often means staffing up because your existing team, to your point, as a full business to run, you might need some third party help. So we did that with Boardroom when we partnered with that other barbershop chain. It was, about 20% of our total size that we were ingesting at once. We didn't have the corporate team to be able to do the ingestion. We did have the right size to, once it was ingested, run it. Um, so what I looked at was what is the fractional help I can bring on board to guide us through that point, and not only bring other sets of hands, but frankly bring subject matter expertise that I didn't have in house to manage
Yeah.
that well and ensure a good outcome. There are other theses that you might have, which are heavy M&A, and one thing I learned that Shore Capital did exceptionally well, so I'm thankful to learn from them. A lot of their theses are built around heavy M&As where you enter with a platform and then rapidly do follow-up acquisitions that allow you to either land and expand in new geographies or new verticals, or continue to build around the existing one that you've had. When you are growing through M&A as your primary growth vehicle, you need to accept that you have to invest in your team at the corporate level beyond what your revenue would ordinarily be allowed to flow. And
Yeah.
the term that Shore uses that I absolutely love was investing with that J curve. You buy EBITDA at this threshold, You add overhead, which takes your profitability down and potentially even negative, so that you have the right investments in people, process, and system, so you can move at the pace of your M&A engine and deliver. Because the last thing you ever want to do with any person's money is buy EBITDA and then lose it from poor operational process. So, it really comes down to what your thesis is. With Boardroom, M&A is not our thesis. It's growth through franchising. When opportunities come up, I'm not staffed to do it, and I recognize that. So I look for third-party help to get me there, and then assess, do I have the right team to be running it in steady state, or do I need to add to it?
Right.
If M&A is your thesis, you need to accept like you're going to be running in the red for a little bit in order to do that right.
Yeah, but and the idea that you've got to invest to get to a platform that's scalable, and then you're getting the benefits of the company getting bigger rather than just bolting on, feels like something which is more and more important now, given the number of bolt-on acquisitions that are coming.
There's a tremendous amount of enthusiasm for bolt-ons right now, in private equity backed VCs, and especially now with search funds, which has become more and more popular. I went to a industry event a few years ago in Las Vegas, and the ratio was stunning to me. For every healthy business, not even every healthy business that was looking to sell, but for every healthy business that was attending this conference, there were two private equity groups looking for either platforms or bolt-ons, and there were three search funders looking to get their foot in the door. Um, that creates a lot of pressure on entry multiple. That creates a lot of opportunities to be kind of blended in and lost in the sea of people who are promising the same things that you're promising. So the ability to differentiate by showing integration and taking care of our founders is a true differentiator. That doesn't mean putting up with all founder nonsense, because if you're a founder in a roll up and you see one of the other founders as being not the best actor, you don't want that. You don't want the private equity group or the investor to be founder friendly to the point of messing up your potential upside. You want that investment partner to be holding a hard line for each of you, but also understanding when life circumstances pop up. So bolt-ons are exceptionally popular right now, between private equity and search funds. And I think mastering why you are different, in a way that makes sense to the founder group you're speaking to, is going to become very, very important.
Yeah, and it's a challenge, right? Because as you said, you started off your career as an entrepreneur, web developer, but that leads to a certain level of autonomy and decision rights, and not feeling like you're really reporting to anybody. And then you go from that into a very structured environment where there are different sets of expectations, and there's different expectations of your leadership style as well. I would imagine that is a challenging step to take for a founder. And then also, how do you manage somebody who's not been managed for a while?
Yeah, there's one tip that I'll throw out, that hopefully your listeners will find value in. But one concept that I started, when I did the med spa roll up to wrangle that, was creating an informal memorandum of understanding. I did this with every seller before we closed the deal. It's not legally binding. It's just an eye-to-eye handshake agreement where I walked through and bulleted out in a piece of paper, here are all the things that I'm asking you to continue to do, or things that you might not have done yet. And here are the things that you're asking from me. Did I capture them all? Because there's the legal side of the paperwork, but there are other things that come up in conversations. Like, yeah, my nephew's been on the books, but I'm going to take him off, and we don't really need him. He's not doing much. It's just to avoid some taxes and pass money on to him. Okay, that's going in the MOU. It's not material enough to make its way into the deal agreement. Another is things like, I need you to be present with the team every time there's a new employee that's added. I need you to be on site for their first day. Like, you don't put that in the actual agreement papers. You don't paper that, but it's setting expectations for what you want them to be able to do, because a big part of why you're partnering with that seller might be they're a great teacher and mentor. Well, you don't want to lose that as they lean out and maybe enjoy the life post acquisition. You need them to be leaning in. So I don't get down into the hours that you're working. Entrepreneurs hate that. I look at it as more of like key events that I want to make sure we're aligned on because it's easier for them to say, yes, that's what made me successful in the past, or I've struggled there. And that's where I need you, Jeff, to be stepping up. And that makes it very clear for me where my responsibilities are too. So I never make it more than one page. I have us both sign it. Again, it's more of a formality. It is a way of doing a handshake that complements the legal agreement. And I found that to be a tremendous way of setting expectations.
And so, I tend to think of leadership in two ways. What one is leading your team, and then the second is that you're a part of a leadership team, right? There's kind of the influencing sideways. How do you deal with that with, an entrepreneur who's come in, who's maybe great at a certain part, certain element of the job, and you want them to influence either new bolt-ons coming in or new franchisees? How do you set those expectations?
A lot of it is, part of the conversation that comes up as you're nearing the deal. If they're one of the first people that's joining your platform, they will often get a very lucrative agreement because they're taking a chance on someone that is less vetted at that point. And part of that conversation is this is a risk adjusted return. We're still getting our feet underneath us, and I need you to be more than a partner. I need you to be a supportive partner. I
Mhm.
need you to take reference calls. I need you to be a good cheerleader. When we go to industry events, I'd like you to be a speaker. Um, Now it's up to me now to deliver enough good experiences so you can credibly and authentically go up there because I never want anyone to compromise their integrity just to tell a story to get other people around our tent. Um, but that's a big part of the message is you're getting a great deal here because I love you so much. I want you to be one of the first people at the table with me. With that comes expectation. And later in the process, when you're, I'd say, nearing maturity of the thesis and maybe begin to think about putting your book together, the bolt-ons you're doing at that point are a very different story. It's, hey, you're buying into a great system. We're happy to be part of it. Here's the rules that we play by. Um, I need you to be comfortable that you'll be a team player in that. And at that point, they can choose to self-select out. Uh,
I love the fact that there's a thoughtful approach on those who are in early versus those who come in later on, and the idea that you've got to make the experience of being part of the organization part of the integration, right? That it's not just the deal is done, suck it up. This is you. It's on you as a leader to prove that there's value in actually being a part of this larger organization.
You should give up a business that has been your baby. Because if you're buying an entrepreneur's business, this is their baby. They might have had it longer than their own kid. Might have cried about that business more than they have about their own kids. Um, and it means a lot to them. Like they remember every single moment of that. And I remember, for the companies that I've helped start, putting together office chairs, like those are core memories. Your first
Right.
employee walks in the office for the first time, and you're like, wait, do I have a laptop for them? Like all those things that are really core memories they're thinking about when they're thinking about, do I sign this paper? And if you are an early entity and you don't have a great track record, you can't point to that to say, "You see, we'll take care of you." You have to be able to look them in the eye and say, here's who I am, here are my values, do they align to yours? And have them believe that you are the best partner for the baby that they have brought into the world and want to see grow to its full potential. That's a big responsibility.
That's awesome. So let's finish up by talking a little bit about Boardroom and where Boardroom is at. Um, eh, as you continue to expand, you're dealing with a much wider field leadership now. So how's it going with Boardroom? What's next for Boardroom?
Boarding's been a lot of fun. It's a brand that's been operating for 21 years now. And it was really the leader in men's grooming, where at the time there were not the options out there for men to invest in themselves. It was still, used and coined with derogatory terms like metrosexual if you're a guy who cared about your
Mhm.
appearance. And thankfully we've moved past a lot of that. But to have that vision, our founders, Bruce and Heather Schultz, just really great visionaries for what was coming and positioning themselves to create a brand where men could relax, look great, and feel confident. It's primarily been a membership-driven model, but we've made some major changes to membership recently, which have greatly increased the amount of monthly recurring revenue. And for someone that runs the business, moving from the episodic, I'll collect it if I collect it, to driving greater frequency of visits to this recurring revenue program allows our team, but also our franchisees, to sleep much better at night. So I think it's one of those businesses where, as I learned more about it, I was so excited because I truly feel this is the best of all the retail opportunities that I've served in. This is the most upside that I've ever seen. This upscale men's grooming is highly fragmented. There's no real national players. A lot of the franchise only brands that grow only through franchising really struggle, especially below 100 units, because they can't afford the investments of those people, process, and systems, just writing off a royalty and paying the company officers that they have at the corporate level until you get to about 100 units. But where we at Boardroom, we've had corporate stores that have been in business in Dallas, Houston, San Antonio, and we've expanded other markets since, that have been open for decades. We have great reputations within the communities, and those salons provide a steady flow of cash that allow us to invest in the business in a way that a franchise only network can't. And I think even more importantly, from someone that's been on both sides of the franchising table, we are a brand that's eating our own dog food by running our own salons every single day. So when we're coming out with a change and asking our franchisees to contemplate it, it's because we've run it ourselves and we're willing to put our own dollars behind it to support it in our own corporate stores, which I think just gives a lot more credibility because those ideas have been vetted. It's here's what we've done and we're going to do for the rest of our stores, and we want you to come with us, as opposed to you need to go do this. And it's all your capital at risk. So it's a really exciting moment for Boardroom. We had stopped selling franchise licenses about 14 years ago, and we just started turning it on again. Because in my experience, there is no better operator than an entrepreneur who has that fire in their belly, that has those local relationships. They will always work harder.
Yep.
They'll wrap their own company car. You don't have to tell them or pay them to do it. If someone comes up to them at Costco on Saturday or church on Sunday and says they had a bad experience, that entrepreneur is going to fix it right then and there. They're not going to wait till Monday and send an email. They're going to fire off a text and they're going to fix it. And that's what I love. So I'm excited to get more franchisees around the table. I think Boardroom is truly a once in a lifetime opportunity, and I feel pretty honored to be at the helm.
That's awesome. That's awesome. Sounds like number one, a great entrepreneurial story, but also just the room to run in the future sounds like a really positive future as well.
It's going to be a great run. Yeah. And I think 2026 will be our best. Yeah.
Great. Jeff, thank you very much for your time today. I wanted to ask you one last question before we wrap up, which is, as you look back on the companies you've worked with and the integrations you've gone through, what's the one thing that you might do differently or focus on earlier on in the cycle if you were going to take all of the knowledge that you've gotten over the last however many years and you were going to put it into use here?
Relationship. When I was younger and less experienced, I credited myself and hard work and ability to be resilient and grind, some level of, just street smarts, whatever, for the outcomes I was producing. As I have gained a little bit more experience and a little bit more humility, what I've seen are the relationships that have helped me through those times, that either put me in the position to show what I could do or given me the grace to absorb the mistakes I was making and get myself back on track. So I really focus now on relationships. We just rolled out new core values about a year ago at Boardroom, and the North Star is we win as one team. The corporate team, our corporate salons, our franchisees, even our partners up and down the value chain from supplies. Like, we are all one team working together here. And the relationships are the critical part of that. So for people who are earlier in your career, the best advice that I have been fortunate enough to follow is find great people and just follow them. That's why I've jumped from industry to industry, especially early in my career where I was trying to find what I was most passionate about. I am very thankful that great people were willing to allow me to come under their wing, apprentice under them, and give me room to make mistakes to allow me to get to the point I am today.
That's awesome. Last thing, if somebody wants to reach out to you, what's the best way to either contact you, or if perhaps they want to start a boardroom franchise, how do they get in touch?
We'd love to have them. Get me on LinkedIn. I have my own personal website, jeffhelfgott.com. And if you want to reach me directly, it's jeff@boardroomsalon.com. But would love to speak with you. Again, I love entrepreneurs and their energy. We could use more of those around our table. And for people who are looking to grow, it's time to build.
Thanks, Jeff. And thank you very much for joining me today on the Mid-Market Edge. Thanks for tuning in to the Mid-Market Edge podcast. For more information, visit the Mid-Market Edge website at midmarketedge.com. Details are in the show notes. Remember to subscribe and like the show so you'll never miss an episode. And until next time, keep building your edge in the mid-market.